All right. Good evening, good morning, good afternoon, wherever you are on the beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host, Benny Allen, along with the awesome partner, Miss Casey Jackson. We are also happy and grateful for each and every one of you being here with us this evening as we close out the week to see what we could take advantage of in the Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper for notes, and let's make sure that we participate and engage. I am actually on my other laptop today, so it is very important that you all drop me a one and let me know that you can hear me loud and clear. I had to change over at the last minute, so I'd appreciate it if you let me know if the sound is okay. All right. Thank you. Casey, good evening. How are you?
Hi, how are you? I'm good.
Doing pretty good. Doing pretty good. So happy Thursday.
Yeah, Friday Junior. I'm looking forward to it. It's a big
I
day
know.
tomorrow, isn't
I
it?
know. Hey, I know, right? Ready for these markets to move, like to get back moving. Like everybody's trying to on pins and needles. Everybody, I'm reading all the articles trying to predict exactly what Jerome Powell is going to say when he gives his speech tomorrow. And man, kind of froze everything up for this week, but that's all right. We'll see what happens tomorrow. So yeah, big day with the speech tomorrow. So let me click out of this and go over, take a look at the Forex Factory. Um, and I actually need to, can everybody see my screen okay? Is it just me? I'm zooming in just a little bit.
Yeah, we can see it.
You good? Okay. All right. I'm working on a smaller screen, so I don't have my usual monitor. But so tomorrow, right? Today we had GDP came out. So hey, if you come over to trading economics, you said the U.S. economy shrinks less than expected. So that's good. That's good. But the key is all about Jackson Hole. Okay, started today. We've got oh, here's pretty good. The Reserve Bank of New Zealand Governor Orr spoke today. So before we get to the Jackson Hole stuff, um, and you can see here coming through on the Twitters, we can see that Reserve Bank of New Zealand Governor Orr central banks may need to push towards zero growth or expects to see supply side impetus to the economy or strength of the US dollar. Now, he is not the only central banker saying this. We heard this from the Bank of Japan as well, that the strength of the US dollar puts strains on trading partners. It does, right? Because a lot of transactions around the world, right, is done in US dollars. So when you look at the exchange rates, the strong dollar, right, the rest of the globe really is having a hard time with that. Okay, so got to do something for that dollar to reach, for the dollar to retreat. So it'll be interesting to see what Powell says. We are at peak inflation. We'll fight it back. Okay, so he's pretty much saying what are you gonna do? We have to do to get this inflation under control. Okay, so another thing I was reading saying for New Zealand, two more possible rate hikes this year before we close out. The size of those hikes, I need to read more about that, but we know this has been going on for quite some time. Going on for quite some time. Went from transitory to permanent, and now we're in the situation that we're in. But there's a lot of smart people out there. We'll figure it out. The world, I think, will be okay. All right. So that's where we are. Oops. Go back to this calendar. Take a look at tomorrow. So the symposium started today. And then tomorrow here, we've got core PCE. It's another, hey, what's inflation looking like for the US? Is it peaking? Is it starting to come down? Looking for further data points on that. And then we've got at 10 a.m., we've got Chairman Powell speaking. So everything, all this week, okay, some of the lack of volatility that we're seeing is all because of everybody's waiting on this speech at 10 a.m. to try to find out exactly what Chairman Powell is going to say. They're going to key in on every single word. They're going to look back at the past central bank meeting notes, Federal Reserve meeting notes, and see if he changes his tone, changes his language. Is he more hawkish? Is he more dovish? And then we're probably going to see the market react somewhat tomorrow. So And then, of course, it's the rest of the day. It's the Jackson Hole Symposium. Then they'll wrap things up on Saturday. So, like I was saying yesterday, for people who might not have been with us, sometimes you want to be careful when you have these major events like the Jackson Hole Symposium that runs into the weekend, because you never know what central banker may come out of a meeting in front of the press and say something that can move the market. Then you wake up or the market opens on Sunday and you have gaps in the market with certain currency pairs. So typically, as long as you have your risk management under control, you can absorb it if you're swing trading. If you're shorter term and you're in a short term trade and you decided to hold it and carry it over the weekend, those are the situations where you may come to your charts, and it's definitely a coin flip. Either sometimes you get lucky and it's gapped up in your direction if you were looking to buy, and sometimes it's gapped down and you're stopped out of your position. So just be careful with that. If you're not in anything right now, like I haven't traded too much this week because of everything, um, and you're flat going into the weekend, that is okay. All right. So any questions on anything with the symposium, uh, anything surrounding the symposium going on right now? Nope, pretty clear cut. Let's just wait to see what he says. All right. We can see oil extends his retreat. Okay. So that's going to continue to bounce back and forth. Germany business climate falls less than expected. We know about that. European stocks rise second day. We know we saw a little bit of a rally in the tech sector. Okay. So that was pretty good for the stock market today. ECB to continue to raise rates. Policymakers noted that the 50 basis point hike delivered in July should be regarded as front loading the exit from negative rates and necessary. Okay, so let me see. And necessary to normalize policy rather than indicating a change in the rate to be expected as the endpoint of the normalization cycle. Okay, so at the time, additional increases in borrowing costs will be made on a meeting by meeting basis. So there's a possibility for more rate hikes. We know we've been talking about the euro pairs, they've been getting buried, but they're coming into some major lows. So eventually we'll get something, some type of catalyst to shake them up out of those zones. So we'll take a look at that tonight. But that's pretty much it on the fundamental front. Hard for that market to move, and everybody's waiting on one event at the end of the week. But we did get some movement, so we'll take a look at that, and we'll go over to the technicals. Okay, and we'll look at the U.S. dollar. Not doing much, still holding that area that we mapped out. Okay, still bouncing around. Right, still making that correction. Right, it's a little bit just holding in that zone. We'll see what happens to it tomorrow with the speech. Okay, but that's where we are with the U.S. dollar. So I expect it to keep bouncing around until we hear something tomorrow at 10 a.m. So that's where we are on the dollar. Now, tonight I want to cover, those of you who have been with us for a while, you guys know about it already, but got inboxed. They saw me flash this investing.com technical summary. Okay. So it's a cool website, right, for news. Okay. There's a bunch of them out there. But I came across this a long time ago, pretty early in my trading career, because you don't use a ton of indicators on the charts, but I will go and look at technical summaries. Okay, so your major technical indicators, this is a good little tool because it gives you kind of like a summary of what the indicators are reading. Okay, so you can see here, like on your euros, right, we're selling. Okay, we're selling. So you can see on your pounds, pretty much selling. And the way I set this up is I set it up kind of like my charts, weekly, daily. Now we know we use the monthly and the weekly interchangeably, right? But the weekly, the daily, they don't have a 4 hour on here, so I use a 5, okay, similar, and then the 1 hour, right? And so that kind of gives me a gauge, especially when I close out the week and you're looking at doing your top-down analysis. And if you're using your fibs through the time frames, right? That's how you like to do it. Then this gives you the ability to say, well, if I'm short, then I'm already going in, looking at my chart saying, you know what? It's a matter of, okay, I'm probably going to have my down AB boundaries. So am I in a down retracement zone? Okay. All right. Simplifies things a little bit. So am I in a, drawn up, marked up all over this chart. So we'll come here. So if I'm bearish in regards to the fib sequence, am I in a down retracement zone? Okay. Or am I in a down push zone? Okay. That's C to D move. What am I looking like when I go down in the time through the time frames? Or am I coming into major lows where I've got a D extension hit? And now I'm looking for a new AB boundary, and now I'm looking for a correction play, or am I in that C to D push zone? Okay. But you can see here clearly on these summaries that it's just bearish, right? We're bearish. Okay. So you can start to put the pieces of the puzzle together when you go and you look at your charts. Now we know we dance around with those intraday plays and things like that, where we can have things kind of going all over the place. But when you're looking at just, pure fundamental swing trading, this really, really helps you out, right? And we see now that these Aussies are pushing bullish. So you may come in on your charts and say, I got a bullish bias on these Aussie pairs. Okay. Investors are still, feeling risky. We know what's going on with China with the stimulus, right? We talked about that last night. Large trade partner to Australia, the largest. So they print that money, propping up the economy, spending going on. So that can benefit the Aussie. That can benefit in some cases the New Zealand. So we think about those things. So if you look at this and you say, you know what, I've got a bullish bias, then you're looking for opportunities to at that point, hey, I want to deploy my fibs in a bullish direction. Okay, so it can really help you to simplify things on your chart. Okay, any questions on this so far? No. Okay. Uh, oops. Okay. So it's just a tool that I use. Now you can customize it. You can build your own profile. Doesn't charge you anything, and you can customize it. Okay. Now the reason why I'm showing you this in this site period, because there's some stuff out there that will sell you this for close to $700. I've seen it. Right. To have access to these type of summaries and information, you could just come here and get it. Okay. So save yourself some money in case you come across somebody trying to push you and sell you on certain market indicators. Okay, is out there. All right. I tell no lies there. I know that for a fact what's going on. All right. And really what those tools are doing is really pulling data from all of these sites that have these type of setups. So it'll put in one tool like retail trader sentiment. Okay. A technical summary. It'll pull together in stuff from your Tradingster site, you know, with the COT data. It'll pull all of that in, and then it'll create an algorithm and tell you, well, overall, right, the EuroCAD as a sell based on all of those data points that it's pulling from. But the information is there. The information is already out, okay, on this for free. So feel free to use it. You can customize it. This gives you 18 pairs. Oops. Didn't want to click on that. Gives you 18 pairs. So if you go to customize, right, you can set it up. So maybe you don't use the weekly, maybe your daily 1 hour, 15-minute, however you want to do it. But then you can just type your pairs in and you can customize them, right? So right now, if I want to finish out these Aussies, I could take that Swissy yen out and I could come in here and put Aussie USD like so. Boom. Hit apply, and then you'll see that that Aussie dollar pop in there. Okay. So this also can help you. So if you're getting like a big mixed bag, like, oh, one time frame is neutral, the other one is a buy, the other one is a sell, the other one is neutral, then you're like, you know what? That's probably moving sideways. I may not deal with that right now. Everybody follow me on that? Drop me a one in the chat. Okay. So it's a pretty good tool to use. I know there's other sites that have it too, but this is the one that um, one of my mentors introduced to me a while ago. So I've just always stuck. Right? I always kept it in my back pocket. So if we go into the euros, so if we go and check out the euros, and then you're coming into your weekly ritual, and you sit down and you got your coffee or whatever, and you're starting to mark up all your charts, and you're going from the top down, okay? And you know that euro is bearish. Okay. Clear this out. So you know that this euro is pushing bearish on you. Then now you're just going to come in from the very beginning, and you're thinking, deploy my overall for the big swing picture. I'm going to look to deploy my fibs, right, in a downward direction. Okay. So we can see here across the board, we're just selling. Now your hourly, right, is starting to make that U-turn. See, it's in a buy position. So you look and you're like, well, yep, we're in sell. That's moving down. Okay. So however you need to see that visually. Okay. You're moving down. We're bearish. Okay. Now, sometimes, right, in the trade plan, you don't see it on my charts a lot, but when I go through and I'm doing a top-down analysis, I'm going to check to see from like my monthly, okay? So for example here, this leg, I like putting the fibs on here to see, am I coming into any extensions? Right? Am I hitting any extensions? Why? Because those are possible U-turn points that can lead to huge moves. So on my monthly, I'm not there yet, right? And you can choose whether or not you want to mark that. So you might mark that as your monthly extension, or just knowing your mind, like that's my level right there, where I'm coming into an extension. Now, this has quite a ways to go, right? When you're reading the market to get to, right? Over 700 pips. So you better believe it. Okay, unless something catastrophic happens, there's going to be points where price pulls back. Okay, it's going to pull back on your lower time frames, on your 1 hour, things like that. Even your 4 at times, it'll pull back so much that those down fibs that you have running, they may get taken out, right? In that particular move. But overall, this is down. This is moving down, and we're coming into major support. So hey, on lower time frames, does it respect this support and pull back? Those are counter trend trades, right? Or it gives you an opportunity to get to a high price and then get short. Right. So right now I'm deploying my fibs in a downward capacity. Okay, I'm not at an extension yet. So I just like to keep the charts clean because sometimes you get all confused if you see too many fibs. So my monthly, I'm not there. Right. Come down to my weekly. What am I looking like? Okay. The lower I go, the smaller the wave. So I'll come in and I'll deploy it. Am I an extension? Anywhere on these charts. Same zone. Okay. On the weekly. So I really like to look for that. Okay. Because when you get those higher time frame extensions being hit, those would be 250, 300 pip corrections, right? That's looming that we need to know about. Okay. So I'm come to my daily. Right? I've already got these levels marked. Okay. And we see that we're right in the zone. Take that out. We say, hey, we've got a zone for potential double bottom. It broke through, right? But it's a matter of whether or not it wants to come back and close above. All right. So we'll wait and see on that. But I scroll out, I come to this level, what do I look like from my daily fib? Well, I don't quite have a 382, but I'm pushing down, right? I'm moving down there. So right now, okay, this, a huge move like that, any type of down fibs you had going on the 4, a huge correction like this that happened takes those fibs out. So what you can do is you can highlight that C there, okay? And you can take, because this is your current price action, you can take this here, that's my daily C, and then you can link that down like so, and you can just run your fibs off that level on the 4, see, just like that. Because we know what this represents overall for daily. See how it came out of that zone? Now we're pushing down, all right? So we didn't quite get a 786 pullback. So we're looking at a potential D extension, right? We may get that D extension. Now, we'll see if it's going to correct for us before that happens. But when you're looking at just flat out raw swing trading, these are your moves here, okay? You're not so much intraday, yep, we can play those. But when you're swing trading, this is just a correction. This is just going to be your correction, setting up for a high price to make us move back down. So eventually, right, that's our target. And we know from that monthly, there's a monthly D extension almost 700 pips away. Okay. So it's going to have its moments, and that's where we take advantage of those pullbacks and trade those plays. But, right, because I was asked that question, if I'm just looking at swing trading and I have a super busy lifestyle and I don't want to play the intraday stuff in the smaller moves, right? How do I make sure I set myself up for success? Right. And this is how. Okay. This is how. So you see this move in the zone, this pullback, this trend is down. You have to be patient. Okay. You don't want to play that. You're playing a swing with the trend. Look, that's a nice pullback. You enter. Okay. The levels in my trade plan that I like to enter are what? I love those 61.8s. Right? I love those 786s. Okay? And I love putting that stop above the A preferably. Okay? Okay? That's me swing trading. Okay. It's Ryan swing trading. Casey swing trading. Right? Larger swings. Here's my high price. My bias is down. I'm gonna place my orders in my zone. Picking this up a little bit. Okay. Place my orders in that zone, and then I'm gonna let the trade run. Okay. So that move, we don't worry so much about the drawdown. We're mapping out our risk. Okay. We're mapping out our risk, and we're letting it go. I can take that drawdown. Why? Because my risk is so stellar, right? The risk management using the calculator, I'm on point to where I can absorb this drawdown and it doesn't tie up my account. Okay. It can tie up my account. I can have multiple orders in. And then the time that it takes, okay, whether it's the same day, the same week, the same month, doesn't matter. Whenever it gets to its target, it's going to get to its target. We don't worry about that. Okay. So, right. So off your 61.8, okay, you get to that D extension, it's 500 pips. Right? That's 500 pips to the downside. And you're doing whatever you need to do. Get work, you're working out, you at the bar with your friend, whatever, watching TV, You're just gonna let the market do what it's gonna do. Okay. Eventually, you move your trade, move your stop, move it into profit. Decide whether you want to take something off the table at certain levels. Other than that, you're gonna let it run. Okay. Any questions?
I've got a couple of questions.
All right. Awesome.
Okay. So because you're swing trading, are you entering on the 4 hour or are you dropping down to the 1 hour to enter and then watch your trades from the 4 hour?
4 hour in a swing, right? So when I was trying to swing trade, it was monthly, weekly, daily, 4 hour. Mentor really didn't like to venture any lower than that. That was it. The only time he would venture lower is if he was trying to make a decision. Say this price pulls back, maybe he goes to his lower time frame. I think the chief only goes to the when he went low, he didn't go to the 1 or the 15, he went to the 2. He used the 2 hour chart. He would go down there when price pulled back to see if it's an optimal area for him to enter and add an entry to the position. Right. So this leg here, okay, this impulse leg here, he could drop down to, he would use the 2, this is the 1, but he would just follow this impulse leg to the downside and he would run his fibs. Right. And so he would use a lower time frame to add to the position. So he still had the same rules, okay, in regards to, hey, I'm adding a position. Where do I add that position? Well, he dropped down to a lower time frame fib like this. Okay. See that move? All the time. All the time. So he would come down. His would be the 2, I'm using the 1. And he would use the sell zone on this fib to add to a position. Okay. So if price moved up long, okay, into a zone, like so, then he would say, you know what? My long-term target is down. I'm at a high price on my chart. I'm gonna add to the position short. Okay. And then as it turned over, it just compounded. Okay. Like so. Okay. And then it just moves to the downside. Okay. And so that's what he would do. He would add a position. Okay. Hey, I had 700 pips to go. So when this trade, get off of that. If this works out, and this trade comes down to its extension, and you get another AB boundary, and you get another pullback. Okay. His goal was to add another position to it. And because now you got to see how we use the workbook and the calculator, you see how it tabulates it. And now you can calculate, hey, what is my max exposure? So we would literally be on sessions and the chief will have 20 something. One time I seen like 30 something positions open.
Wow.
Because he was in longer term trade. So what happens there, right, is that he's got everything managed, but he always has something running. So he's got his TP set. Trade will take profit. That's gone. He probably didn't even see it, right? He'll look at his balance, but then there's some trades that will lose. I don't care, right? He's in his profit risk reward ratio in every trade. So it was just a constant cycle. And the reason why he taught us how to do the weekly ritual, because it's like, yeah, I've got 6 or 7 trades already running coming out of last week. But because we're sitting in positions like this, that's going to run 500 pips or so, 600 pips, 700 pips. While that's running, there's always something else setting up. You guys get what I'm saying? Does that make sense?
Yes. Mm-hmm.
Right? So there's always setting up. So now it's just a small, right? You're thinking wealth. It's just a small accumulation, right? A small accumulation, trading small. So he's not uh he's not so much appreciate the feedback. So he's not so much concerned, right? And neither are we when we trade. So we teach a lot of lessons in different angles because we know there's people from all walks of life. People have different psychology, so we put it out there, and then eventually you'll come to the conclusion that, hey, this is how I want to trade. This is how I want to do it, right? We can't determine that for you, but we're not so much concerned with a perfect entry, right? We're not concerned so much with that. What we're looking for is it in the zone? What's my directional bias? And is it in my zone? Can I get my proper risk to reward off? Because then it's about a series of trades over time. Say that all the time. We can't stress that enough, right? Because sometimes we get hung up on one trade so much, right, that it can just ruin our day. And a lot of traders start off like that, but what happens is they end up having to shift to more like swing trading because they can't deal with the up and down emotions of constantly being in front of the computer, running super tight stops, getting stopped out, coming out of a day where you're trying to make money every day. And now I've lost money 2 days in a row. Now I don't want to talk to anybody. I'm all upset. You know what I mean? So some people can't handle that. So they eventually evolve over time to more of a swing trading method.
That's real.
I was there, right, Casey?
Ah,
Right?
I think it was Ryan I told when I blew that $8,000 account, I didn't go to
Mhm.
work the next day.
Yeah. Oh
Wow.
man.
Wow.
Oh my goodness. I will never forget. I'll never ever forget it when I first started trading. Jumped in, thought I knew what I was doing, and my wife and I was sitting on the couch, and I was up so good in the trade. I was over leveraged. Now I've never been like crazy, ridiculous over leveraged, but at this point in time, I was over.
Yeah.
And this is you want to talk about an introduction to fundamentals? Something happened. What New Zealand? I forgot. It was during the Asian session. And he got up at the podium. I think it was a central banker, got up at the podium and said something. And I looked down at my phone, man, and it was just gone. Like my gains were just gone.
All that
Yeah.
hard work.
Oh, not only all that hard work, I'm sitting up here trying to get quality time watching what's supposed to be a good movie. I don't want to watch the movie anymore. I'm getting asked the question, what's wrong? I'm like, nothing. Like, you know what I mean? So, it can help you avoid it can help you avoid all of that. And it depends on your lifestyle. Because over time, this helps you to accumulate wealth. It really does. And just because you're trading, right, at 20, 30 cents now, which that adds up big time. It's amazing. But eventually that becomes $2, right? $3. Okay. Man, I just got 1,500 pips this month at $3 a pip. I got it at $2 a pip. Okay. I just made $3,000 just swinging, just letting the trade swing, right? So just some things to think about as you evolve. So when I get inboxed about this, I'm like, oh, this would be really good to talk about uh, this evening with the crew, especially since the market's waiting on what's going on tomorrow. But just how do you set yourself up? So you may not be so apt to play this move here, this B2C, as opposed to I'm bearish on this Euro Aussie. So if I'm bearish, the next question is I need to let that trade come to my zone. What my trade plan says is my zone. I need to let it come to my zone. And then when it gets in my zone, I've got the proper risk to reward. I'm holding on to my bias and I'm taking the trade. I'm gonna let
Okay.
it go.
A couple more questions, and this is about
Sure.
your trade plan. Now, you said you wanted to come to your zone. Do you put your entry a couple of pips prior to that zone, or
Mhm.
do you want to see it go in that zone, come back out, and retest that zone?
Yep. So when I'm swing trading, I'm trading small. So these are going to be quarters, right? So what I typically do when I'm swing trading, for one, I use a lot of limits. Okay, swinging when I'm swing trading. So these are already be preset. So what I'll do is I like the 61.8, I like the 786. So I'll set sell limits. I don't put them right at the level. I usually put in 5 pips, sometimes 10 pips for it, because I don't know about you guys, but there's been so many times where it's gotten close because it's really not a line, it's a zone, right? But there's been so many times, especially in the earlier days, where I had a limit that was right at a target and it turned over 2 pips early, and I missed out on 150, 200 pips to the downside when I come back and check my computer. So one of the little nuggets that my mentor gave me, early on was always set your limits just prior to your area, right? Prior to your zone. So when I'm swinging, I'm not waiting on pre-testing anything like that. I'm just, this price needs to come into the zone. If I got sell limits, it's gonna hit it. Why? Because my backside is protected, right? Always put that stop 5 pips, 10 pips above your A or whatnot. But in case price wants to come up and double top and then turn over. So, and then when you look at your respective extension in this point of 1.618, the extension, you're going to do the same thing. You're going to come in here, all right, and you're going to put it prior, 5 or 10 pips prior to that extension, okay? Because it can get it, sometimes when you get it to that extension point, it can explode and go in the other direction, okay? So to try to avoid all that, sometimes you can't, but to try to avoid all of that, you put it just a little bit before, okay?
Got it. Thank you.
Yeah, you're welcome. What's your next question?
Okay, it was about basically you've already entered, because the second part of that was, do you wait for price to retest the zone? But because you've already set limits, when it
Mm-hmm.
hits that limit, you're in.
I'm in. I'm
Okay.
in. Okay, I'm in. And like I said, I'm glad that I got inboxed about that because we hadn't gone over this for a while, especially for our newer traders, right? We've been working on more, because a lot of people, they do, especially they like exact entry. So that's why we went to the cloud to show people to have patience, things like that. If you want to play, that type of game and trade it, right? So we hadn't come back and revisited this in a long time. So it's a great question. Perfect. Good timing for that question. But yeah, I'm already in because my risk, right? My risk is already figured out here. I know that because I set this trade up, the math is already done. So if I'm in at a quarter percent, and I'm dividing my risk by my stop loss, if I stop out on both of these, I'm out a 0.5%. So I'm gonna let that go
Okay.
and let that turn over. That was just like what was it a while ago? Who in the group remembers that? It was I think it was the Aussie dollar, right? It was the Aussie dollar. There's an Aussie dollar play on the 4. And it kept going up and up and up. Then it would turn over and correct. Then it would bounce around. And then it just boom. It got the momentum and it took my A out. And it's like, all right, you had a 0.5%. It took forever to do it, but it took it out. But then it turned back over eventually. So, but that's just a trade that you lose. I never pretend that I control this market. In the beginning, I used to, because a lot of the things, a lot of the hype that's around trading, all of you use this indicator. So um, this was just a better style of trading for me in my psychology. Do I get in my moves where I want to scout, play around on them lower time frames? Absolutely, I do. Because I'm just a trade geek. Like that's just who I am. Um, but when these are running, man, it's like watching paint dry. So it's just like I take that opportunity to get involved in other stuff. That's why I learned to trade on the lower time frames. But for the most part, this is the bread and butter here. Okay. And that's
Oh,
moving down. Mhm.
okay. Last
Yeah.
question.
Okay.
No trend line to enter. You set your limit orders because you've got that protective stop, like you said, and when
Mhm.
it hits it, you just roll with it.
Yeah.
Okay.
I just roll with it, and it comes down to your psychology. Some traders, that's why we teach you, right? We teach you the 1, 2, 3. And sure, we teach you the cloud breaks. We teach you to look, how to look for confirmations, how to look for uh candlestick patterns, right? Morning stars, evening stars. You've heard us talk about all of that in key areas where price may want to make that U-turn in your zone. Um, that's good for some people. For others, it's not. Swing trading
Right.
really, it really worked for me when, man, I got 3 young kids that's running around, flying around all the time. I got to get one to this practice, one to the other practice. There's a there's a day in a week that we have where it's like we got 3 kids at 3 different locations playing sports. So I can't sit in front of my computer and wait and look for that confirmation, no matter how many alerts I might put on. It just becomes difficult. So swing trading, works best for me,
Got it.
consistently. So yeah, yeah, great questions.
Got it. Thank you.
You're welcome. Anybody else has any questions?
I have a question.
Sure.
It's more of, I guess it's more of an experienced question. So how do you, I guess, find the patience or the confidence to stay in a trade for a long time? Because I've noticed that I might mark up a chart, let's say for the CAD yen or so, and I feel like it's going a certain way. And then as soon as I get caught in drawdown, I get scared and I just take like whatever little profit I have. And then I go back a week later and saw that, wow, that was a 300 pip move. And I only sold it for, X, Y, and Z. And I'm just like, dang, like I should have just had more confidence to stay in that first time. Cause I was in and out like 4 times,
Yeah.
So like, how do you like, I guess, build up to like, you know what, I'm just going to stay in it and let it go.
Yeah. Time and stand on a chart. So one of the things, and I think I mentioned it this week or last week, one of the things that me, Ryan, and Casey, one of the things that we'll do is that we'll go all the way back, right? So if I come back on this and we did it on the 1, and we do it just as a yearly exercise, right? So, and you can do it at any time, but we go all the way back. We went, it might have been like January of 2020 or something like that. And we just start running fibs, right? We do that just to see, all right, how many played out, what does it look like? So you can kind of get a feel for it, okay, to know that, man, this works if I just, if I take myself out of it, right? That was my issue. I wouldn't take I felt like I constantly had to look to check. So another thing I had to do is just find something else to do, right? Just had to find something else to do because it was messing me up because I was in the same situation as you, where I kept the chief used to tell us all the time, like, don't fiddle with the trade. And that was like one of his number 1 rules. Like, once you set up your trade, don't fiddle with it, unless it's going, you set it up, hey, this trade is a 500 pip move, I'm down 100 pips. Do I want to start adjusting some stops? Do I want to take some money off the table? Things like that. But other than that, you don't play with it. Let it run. You let it run. And it's a hard, I'm talking about it, but it's hard. It is. I'm not gonna sit up here and say, oh, it's easy. It's difficult. It's difficult to do, but through repetition, you can get it. So you can see what we do is we'll just run fibs. Like, man, how many B2C moves, how many 80/20s did we get? Right. So when you see how this fib got taken out, right? We'll just run them the other way like this. Okay. And we'll say, like, man, how many times did we get right a reversal with the trend? How many times did the A get taken out off this B2C move? Right? Got taken out and then moved to the upside. So we'll run them, right? And we'll start doing some math, right? In regards to based on our trade plan, where I would have taken a trade, how many did I win? How many of those trades lost? So it's back testing in essence, right? And we just look at the flow. and look at the fibs and look at them moving and say, you know what? The market really does move in waves, right? It moves in waves. Now, so we know that. So once I learn how to do some top-down analysis and get a system down to help me determine the directional bias the best I can, that's where the success lies, right? Because this is a lot. See, like, right? That's a huge move. Look at this move here up into this zone. Okay. Now that was critical there. Because look, you've got daily levels sit right there at a key zone that I like to trade. Now we get short. See, now we get short. That's on a one. That's a 1 hour. So you'll hear people on YouTube say all the time, like, oh, those big 200, 300 pip moves, those are once or twice a year. It's because they don't know how to find them consistently.
Mm-hmm.
They don't know how to zoom out, get outside the picture frame. And if you follow, I don't know if you guys follow like a lot of that's 500 pips. So a lot of you guys, you just see their evolution. So they jump on YouTube, start making videos, and they're learning as they go. But after the years, you start to see them evolve. Like they go from having 50 million indicators on the chart. Then you hear him talking about, oh, it's all about the naked chart. Oh, it's all about supply and demand. Oh, it's all about price action instruction. Like they just, as they evolve as traders, they just keep making more and more videos, which that's one of the reasons why you have people all over the place. But even they discover over time that, man, the best indicator is really my own two eyes because it's real time, right? And two, the market really does move in waves. So you'll see them first start making all types of Elliott wave videos. Then now you hear them, people evolving to what? A lot of them are talking about the Fibonacci sequence, right? Because they're starting to evolve as traders and figure it out. Like it doesn't have to be investment.
Yeah,
You know?
because for me, it feels like, when you're cooking and you
Mhm.
have to wait till the food's done, but you keep nibbling and nibbling. By the time it's done, you're already full. That's me right now. That's
Yep.
me.
Yep. And that's just, hey, that's not just unique to you. That is just, and the reason why I go back and tell those stories like that, because it's just your evolution as a trader. That's your evolution as a trader. And that's why they always say, if you hang in there long enough, you'll find success. The issue is people don't hang in there long enough, right? When you talk about, you hear Ryan talk about Mark Benavini, right? World trading champion, multiple times has made millions of dollars. He'll tell you flat out, he didn't make money for 7 years. Now, how many people will stick to something that they didn't make money in for 7 years?
Nobody.
Right. What you gonna say to your wife?
Mm-hmm.
Wife looking at you sideways like, it's been 7 years, dude. But to have that type of resolve and dedication to commitment, because what he said is, my first profitable year wiped out all of the 7 years that I was losing money. He's a millionaire, multi-millionaire, writes several books. Right? People quit. And that's why we always say the only way you truly fail is if you quit. You quit, you fail. Right? So you just have to keep at it. But hey, I will tell you, there's times where what you're talking about you're doing now, I still do it. There's times where I still do it. And I go back just like you and say, man, that trade moved 400 and something. What was I doing? Right? Or you'll look at your history and be like, like you said, I was in this trade 3-4 times. Like, why? Like, why was I in and out of this trade so much? Okay. Those mindset Mondays are critical because that's the biggest separator is what's going on between your 2 ears. That's the key. You guys see this. You guys, you know how to do this, right? You know how to do this. It moves up, down, and sideways. It's very primitive. We say that all the time. It's our minds, our brains, they complicate things. Okay. We're looking at lines on a chart. Look. These are some candlesticks. They're moving to the downside. We're in an area now, fib or no fib, where we've got some support. Right? You move down to the charts. At some point, we're thinking correction. Okay. Now, you may be in a situation where, and another thing that used to get me, right? And my mentors had to work very, very hard on me with this, is that fear of missing out and sticking to your rules. You can have a setup where this price could have came here. Okay. Just real talk. Just having a conversation today. Price could have came to this 3882 and then dropped. Okay. 676 pips. If your rules say that you only trade at the 61.786 zone, that's your sweet spot. That's where you find your magic. You don't take this trade. This is not your trade. So the reason why we can look at 20-something charts, right, and not really get caught up in over trading is, for one, risk management, but for two, out of all those charts that we look at, depending on the week, it's only going to be 2, 3, 4 setups that meet our expectations anyway. And you have to be patient and wait on that. That's why people like the cloud so much. The cloud forces you to be patient. If you don't break this cloud, I'm gonna take it straight. I'm not gonna take it. So it just adds that extra discipline. Right? Like, no, man, like it doesn't give me that extra early entry, but it's keeping me disciplined. If this price is holding below the cloud and it's not giving me what I'm looking for, I'm not taking the trade. So that really helps people out. It really helps people develop, their patience as a trader. But this trade here, so if you're looking at this and this runs to the D, right, off of this shallow retrace, this 80-20, this fails. It goes to the D extension. Then you're just gonna wait for that new fib to form. Wherever that fib forms, right? This is gonna be let me see. This is like my high in the zone somewhere up in here. Wherever that new fib forms, okay. If you don't play those B to C's and you're thinking I'm bearish, then you're just gonna let that trade ride up. You get 300-400 pips, and then you're gonna get short when it hits your zone. That's it, right? So you don't have to be all over the place, because what'll happen is, if you don't have strict rules, everything will look good. Has that ever happened to anybody who's staring at the charts? Drop me a 2 in the chat. Huh? Everything looks juicy. Man, like a nice shiny apple sitting in the store. Okay? You gotta have rules. Okay? So that's the key. You'll get comfortable with the charts that you want to trade on. Right? Oh, I don't so much like the 1 hour chart that moves fast. Moves too fast. I like the 4. Right? And I'm just gonna be patient. Then that's what you do, but you gotta stick to it. And the thing about trading is, and why accountability partners are fun, because you can convince your own self of anything. Right? I can look in the mirror and say I look slimmer, but I know I haven't been on the track in 2 months. Right? I know I haven't changed my diet now one bit. Just had 3 slices of pizza before I stood in the mirror and said that to myself. You convince yourself of anything. So it's always good to have someone to hold you accountable. Okay. But look, just go through your chart sometimes and just look at the moves, look at the price action. A, B, C. See here? See this move here? Now, on this trade, if I set this up, okay, right, for that 61.8, that's 786. So my first limit is hit. Based on my first limit, my extension, okay, is 1.618. Boom. Okay. 61.8 pullback, 1.618 extension. But guess what? I went in a drawdown. You know what? What we say is, as long as price doesn't take out the A, it has no choice but to go my way. So that's another thing, right? So when you talk about how do you stay in the trade? My risk management is keyed in. Okay. I figured out my risk before I took the trade, right? Forgot to add that. They asked that question. Okay. That helped me a lot. Okay. So I just wasn't just shooting from the hip. I already knew what I could lose. And we say it so often here that it seems like it's the norm, but it is not the norm in trading. Most people do not figure out what they can lose, afford to lose, and become comfortable with it before they take a trade. They think the opposite. What can I gain? Right? So it's a different thought process. So I already know if I lose a trade, I lose 50 bucks. Okay. But as long as this trade dances around, right, I'm gonna expect it to go where it needs to go. Okay. I don't know if it hits my stop because I'll look at my account balance. Okay. Now I'm in this trade. Now this is in drawdown. No worries. I'm in at 1/4%, 0.5%. I've done the math. I'm not sweating that. Why? Because I don't have to worry about getting margin call because I'm not trading the standard on my $600 account. Right? I'm not. Okay. I'm in there. 60 cent, 30 cent, 40 cent. Right? So that helps me to become more comfortable. Now, when this pulls back to the 786, deeper correction, right? I have to now think the deeper the correction, the less momentum. This is the theory. Doesn't play out like that all the time. But the theory is the higher I move on that correction, the less momentum to the downside. So if I get a 786 pullback, I then adjust my stop, my take profit. I adjust my take profit on both positions. This one's in drawdown. Okay. My original TP on this move was a 1.618. My 786 setup sell limit is already, I shouldn't say adjusted on both because this one is already going to be, all right, at the 127. Okay. 61.8 pullback. My TP is going to be a 1.618, whatever that price level is. Okay. So 134.53. That's going to be my TP on this first sell limit. So when I go into my phone, I'm like, oh, bias is down. I got a new down AB boundary, a new fib. I'm going to go put a sell limit here at 140.89. I'm going to put a stop loss at 143.17. I'm going to put my TP for this limit right here at 134.53. Okay. Now I'm good. And this trade at this point, the price is here. Just started a new AB boundary. So I'm walking away. Second sell limit is going to be at 141.77. Stop loss 143.17. But my TP is going to be at 136.30. I've already got this mapped out in my head ahead of time. I calculate my risk off. Right. So think about that. My stop loss from my 61.8, right, to my stop is 227. That position size is going to be smaller than the sell limit at my 786. Why? Because I take my risk and I divide it by the stop. The higher it pushes up in the zone, the closer it gets to my stop. So your lot sizes aren't going to be the same. See? And that's how you keep your risk management tight. Now, once this price pushes up and takes me in at the 61.8, if it continues to progress to my second limit order, all I have to do now is go into that order at the 61.8 and change the TP to that price level at the 127, like that. And now I'm just gonna let the trade go, right? If you see price push up in the zone and it goes beyond both of them, and it goes to, it takes back 86%, it hits that 86 level, then guess what you're gonna do? Less momentum to the downside. So I'm gonna go in and I'm gonna modify my order, and I'm gonna change both my TPs to the 1.18 extension level. And that's how you manage that trade. So it becomes very, very simple, right? You go on your phone and do that, right? You go on your phone and do that. And then I'm just gonna let this go. There's nothing you can do, right? And I'm saying this because we all, as human beings, we like to be in control. There's nothing you can do but set that trade up and let it go. You don't control any of this, and we never will. We don't. We don't control the pathway. If this wants to dance around for 6 days, 8 days before it heads to its extension, we don't control that. There's no one path and progression in these fibs that is the same. It's not. Yeah, ultimately it's an ABCD wave, but how that takes shape and the time in which it takes to travel, we don't control it. Right?
Hey, Benny.
Casey, yes.
I don't know if it will help anybody else, but I use that little text box up there. And after I do my analysis and mark my fibs and whatever indicator I'm using for that day, only thing that I do is mark the levels of my fib levels of where I'm going to take my price, and I write it in that box. Soon as I got the idea in my head, I got and what I'm about to do is put my risk analysis in there. So it's in my face. So when I open up this chart, it's reminding me, this is what my plan is for this currency pair. And, I'm staring at it and making sure that I'm being accountable to what I wrote down.
Absolutely. I can dig it. Putting those notes right on the chart. It's a good visual.
Yeah. And it also helped me with my patience, because I think in the beginning for me, coming from high frequency and learning how to slow down, because like I didn't know when I was having FOMO. I didn't recognize the FOMO. And when you was like, open up the charts and look what I got Monday, I was like, dang, Benny, why you got to talk about me like that? It wasn't even Monday, it was Tuesday night. I waited a day. But that's what I started doing to make myself accountable, is keeping it in my face and reminding myself. And then in the background, remember what my why is, because if I don't learn how to be patient with this, if I do get the money, how I'm going to act then?
It's a great point. That's a great point. That's a great point. Good nuggets. Good nuggets. So I love this group. We learn just as much from all of you through the questions that you ask, right? And you sharing your discoveries that you guys learn from us. And that's what it's all about, right? One big mastermind. So that's the EuroCAD, right? So you can go through all of these, and we know, for one, technical summaries, we're down, right? So you can already see that in your head, okay? Fundamentally, when you pull fundamentals into it, fundamentals help you to gain an idea of what might be happening with the chart or chart direction before you even turn on the technical charts. Fundamentally, oh well, the euro is a lagger in regards to monetary policy compared to the other central banks, right? So when you talk about things like, monetary policy divergence, right, they're lagging way behind. So if I click on my chart and I see that this euro is moving down against the other major currencies, it doesn't surprise me, right? It doesn't surprise me. It'll have its moments, okay? It'll have its moments, but you know, over the medium to long term, this is short, okay? And that's how the big boys think. That's how Goldman Sachs thought, you know, 6 years ago, that the euro was eventually going to go to euro dollar was eventually going to go to parity. 1 euro equals $1. Like 6 years ago, they said that because they were looking at the monetary policy divergence, right? And forecasting what could happen over the long term, right? So all we're saying is give yourselves credit because you can do that too. You can do that too. You guys have the ability now to look at, you know, the money shows and see, this is an agenda, right? That's not what's about to happen. I see it on the charts. I understand the fundamentals. That's not what's happening. This is a bunch of mess, right? So you have the same ability to control your financial future, right? By understanding how to do this. Okay. So we look at, right, the Euro Swiss pattern driven market. We all see that. That's clean as moving down, right? But we also know that crowned, right? So when we take a look at this here, it's like everybody sees that. Okay, not quite a head and shoulders because it didn't hold at that neckline. Right? It broke the neckline and then it pulled back. Boom. See? Now, so when we see something like that, we look at the euro fundamentally, that the euro is tanking. It was having issues before the war. Okay. Right. So now we see that and we're like, well, we're short off the right tip of that crap. Okay. So as we move down through the zones, if our pattern is going to play out, that's going to be bearish for quite some time. So there's that right tip of the crown. And we move bearish right down to the target. Okay. So now it's just a matter of, we're at these lows, major lows. Do we want to start to correct on these euros? And what's cool about currencies is that, for one, it's not that many of them. You're not looking to trade 1,000 companies and do all the research, look at balance sheets, all of that stuff. What usually happens is, oftentimes, most of the pairs, right, in your euro family, they tend to do the same thing, different speeds, right? Different timing. But if that euro is going to start to correct, you're going to see it across the board. So that's why we can enter like, man, I'm short on these euro pairs. And it's like, what? How'd you get, 600 pips, 700 pips, 800 pips? They're all correcting. All of them are correcting to the upside. So I'm just buying right now. I'm just long, right? At this exhaustion. Okay. So that's the thought process. And I wanted to, like I said, based off that question I wanted to make sure that we went back and addressed some of these things, especially for our newer traders. So I hope you guys didn't mind us doing that tonight, because I think it's important. I think it's fundamental to your success. Casey, thanks for being here. Appreciate you. Good luck at your appointment. All right. So wanted to make sure we covered that. But look, it's bearish. Okay. Am I in a down retracement zone, like here potentially, or am I in a C to D push zone? That's it. And there are going to be days where you get on the charts and there's nothing. And that's okay. Because you don't need to hit the charts like you punch the clock every day. Right? That's a mindset. That's a certain type of conditioning which is fine. Go to work and make a living, but you don't have to approach the charts like that. That's the point I'm trying to make. You're never gonna hear me knocking anybody that works and makes a living. I think that's crazy when people do that. Nothing wrong with that. Working, providing for your family, making as much money as you can, especially you have a degree, you have a certain skill set, you should go make that money. But you can also learn how to make that money work for you. Right? So this is where we are. So you're thinking, my game plan on this is I don't want to play that, but I expect nothing's showing me, right? That the zero, okay, it'll have its moments where, they just hiked the interest rates by another 50 basis points. Well, oftentimes what that'll do is push the price action right up into your zone short. It's not sustainable, right? It's pushing you to your high price. And then when it gets to your zone, if your bias is bearish, right? If your bias is bearish, let me take these out to roll with the trend on this one. So if your bias is bearish, then it's like, you know what? I'm gonna check back during the week. I'm gonna look, see if it's moving in that direction. And when it gets up in my zone, though, now, right, I might have my limit set, okay, in my area. So you can set this up right now. 4 hour, I'm gonna set me a sell limit there. Set me a sell limit there. I'll put my stop here. You can put that right in your phone or on your computer and say, this is when I'll look to get into this trade. For this position, my TP is going to be here. For the 61A position, TP is going to be there. Of course, that's a daily level here. And I'll put my sell limit like that. Bang. Now, whenever that happens, if it's going to happen, it'll happen. And it'll take me into that position. But the only thing that I'm attached to and addicted to is the process, not the outcome. Process. Make sure the money consistent. It's following the same process. Okay. So in essence, if I'm rolling with this and I don't want to play these swings, then I'm just going to wait for the high price because I'm thinking over a long time, I'm still expecting the euro to be bearish. It's just going to have a correction. Yeah, that correction is going to be huge if it happens. But I'm willing to pass that up and wait for my high price to be short. Why? Because there's something else in this Forex diaspora, whether with the Aussie pairs or the dollar pairs or the New Zealand pairs or the Canadian pairs, right? That's setting up, that's getting close to setting up anyway. I'm actually going to be in. Something's going to hit my limit and I'm going to be in those trades. So once you get it going, get a good cycle going, you're always going to be on the brink of entering something. Okay. But that's how you let the system work for you. Any questions before we close out tonight? I appreciate the feedback. Thank you guys for being here as always. Right? Asking great questions. Yep. And I'll replay. I'm on my other computer today. But once I get my other computer back going, I'll make sure I posted the trade plan before, my trade plan before in the Telegram way back when. So I'll make sure that I repost it again. All right. No more questions before we close out. Okay. Well, that's it. We're gonna wrap this up. Oh, we will send a notice out for no weekly ritual this weekend. I mentioned it this morning. And we're definitely going to hold off of that for this weekend. So we've got some big events going on. So we won't be having that this weekend, but we will post setups that we think are hot out there for everybody. Okay.
Thank you. Thank you for a great session.
Oh, you're welcome. Thank you so much. Appreciate it. Have a great night, everybody.